Hello traders, this is the slow stochastic reloaded part 5. If you have not watched part 1, part 2, part 3, part 4, you may do so before watching this. This video has been dedicated to the TSTW traders in Singapore. It is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. We encourage traders to watch all reloaded stochastic because each video reveals a specific trading strategy. Let's get started. Thank you.
Stochastic Reloaded Part 5. If you have not watched Stochastic Reloaded Part 1, Part 2, Part 3, Part 4, you may do so before watching this video. Alright, let's get started. In this video, we will talk about overbought market condition, oversold market condition. In particular, we'll talk about stochastic overbought and stochastic oversold. When we are talking about overbought market condition, the first thing that is coming to our mind is the fair value. Okay, when a financial instrument is trading well above its fair value, it is considered as overbought. On the other hand, when a financial instrument is trading well below its fair value, it is considered as oversold. Okay, this is the first thing that is coming to our mind when we are talking about overbought condition. Okay, all right. The overbought condition does not mean that the financial instrument is due to come down. Okay, it doesn't mean also when the financial instrument is oversold, it doesn't mean that the financial instrument is due to go up. Okay, but the first thing that is coming to our mind when we hear overbought condition, okay, or when we are in overbought zone, okay, is the fair value. We want to know where is the fair value, okay, so we can determine whether we can look for an opportunity to sell or to buy. Okay. On the other hand, if the financial instrument is oversold, you want to know where is the fair value. The smart money will always pay attention to the technical fair value, which is the smart media line, talking about the 6 critical price levels, okay, and also to the fundamental fair value. Most of the smart money will pay attention to the net asset value and also 5 times, okay, the revenue, the annual revenue, okay. The second thing that is coming to our mind when we are talking about overbought and oversold condition is the sentiment. All right, very very important. All right. So when the market here, you can see that this Mobile was perfectly overbought. Okay, you can see that it was overbought and the market changed direction because the bullish sentiment that was increasing has stalled at this point. The bullish sentiment, okay, has reached its peaks, okay, and the price did change direction. This is an overbought condition right here, overbought zone, because the bullish sentiment has stalled. So the second thing that we think of when we are talking about overbought condition is the sentiment. A bullish sentiment will reach its highest level, okay, when the market reaches the overbought zone, all right. And when the market is oversold, which is here, you see, the price was going down, going down, going down, and was oversold in this session. If it was not oversold, the price will not change direction. So the first thing that I told you is the fair value. The second thing is the sentiment. So the bearish sentiment that has begun in the overbought zone, continue the movement to the downside. So the price reaches, the bearish sentiment reaches its lowest point. So first thing, is the fair value. We are talking about technical fair value and fundamental fair value. The second thing is the market sentiment. Talking about the market sentiment, the first thing that we want to pay attention to is the trading triangle. But in this case, we want to focus on the market. Now I'm going to look at the S&P 500. Okay, let's go and look on the S&P 500. When the S&P 500 is in a resistance zone, generally speaking, the market will be very cautious. All right, so you can see that there was a bullish momentum here, and this bullish momentum has stalled in this point. This is an overbought zone. The bullish sentiment was has stalled at this point. All right, Also, we will pay attention to the fair value of the market itself. All right. So here again, for this was in the year 2000. Okay. So we have an overbought zone. In 2007, the price reaches again the same overbought zone, talking about the market itself, and also the trading triangle, the market first before the individual financial instrument. So as the price was approaching this overbought zone, most of the smart hedge fund traders and investors took their money out of the stock market because they knew that the market was approaching an overbought zone and the sentiment, the bullish sentiment, is likely to stall. Okay, and exactly this is what has happened here. The bullish sentiment that was developing up to this point has stalled. Okay, and the price went down big time. Okay, all right. Here you can see that there was a bearish momentum that has begun at overbought zone, continue the movement to the downside. At this point in time, the bearish sentiment reaches its lowest point. All right, and the price did change direction here. This is an oversold zone. Price in 2009 reached the same oversold zone. As the price was coming down near the oversold zone, the smart hedge fund traders and smart money took their money out of the bearish trade. Okay, took their profits out of the bearish trade. Okay, and was waiting for the price to find a support. Okay, so the first thing that we are talking about when we are talking about the sentiment, we are paying attention to the market itself. Again, today, which is today is the 1st of October, 2012, and the time in London is 14:04. In exactly 26 minutes, New York will be open. You can see that the market is now again in the overbought zone. Smart hedge fund traders, smart investors will take their money out of the bullish trend and will wait for the price to cross the market to cross above the 1500 level and to find a support above the 1500 level before looking for another commitment, so to speak. Okay, so when we are talking about the sentiment, we must pay attention to the market itself and use the trading triangle like a professional traders. Let's move back again to the ExxonMobil, Epic XOM, S-Ray, Oscar, Mike. This is the yearly chart, as you can see. So when we are talking about board, the first thing that we are taking off is the fair value, technical fair value, smart median line, and fundamental fair value net asset of the price above 5 times the revenue. We are talking about overbought, market, a condition, oversold market condition. Again, both, we are thinking of the technical fair value and also the fundamental fair value. But the second thing that is coming to our mind, is the sentiment. Without a change of sentiment, the price will continue the movement to the upside. Same thing when the price is going down. If the bearish sentiment remain intact, the price will continue the movement to the downside. It doesn't matter whether the price is at a support level. If the bearish sentiment remain intact, the price will break below that support level and retest that support level, and then the final resistance right there, and continue the movement to the downside. The fair value and the sentiment, these are the two things we want to pay attention to when we are talking about overbought and oversold condition. The madness, so to speak, in this market is that traders are buying when the RSI is overbought, or the CCI is overbought, or the stochastic is overbought, unless they have excellent system to manage their money. That's perfectly okay, but otherwise it's just a kind of a gambling in the market. All right. On this yearly chart of ExxonMobil, we have Pitchfork tool. The Pitchfork tool, as I explained to traders, I'm not very excited to do too many videos about this. It's just you join one pivot point to a price movement, full stop, nothing else. So you see the price went down from here to this level here, and we join one pivot point to the center of this movement to the downside right here. This is a pivot point. The price moves down to this level and change direction. We join this pivot point to the center of this. All right. So when we are talking about overbought and oversold zone, we are talking also about a target zone. The bulls that enter a trade will be prepared to take their profit at a target zone. The bears that enter a trade will be prepared to take their profit at a target zone. The market usually will be overbought at a target zone. If you want to know more, you need to go to www.stochasticmargin.com, click on convergent signal. All right. So as the price is going up now, there are target zone here. You can see the median line or the pitchfork tool, the median line, as the price approaching the first resistance level at 1500. Okay, that's the first, okay, target zone. If it breaks above it, the next target zone is the median line of the pitchfork tool right here. This is a target zone. Usually the market is considered as overbought if the price is rising up to a target zone, because very often the bulls will be prepared to take profit. On the other hand, if the price going down, okay, and it reaches a target zone using the Fibonacci projection or extension, all right, using pitchfork tool, using chart pattern, or using Elliott wave, okay, pattern, there are 13 Elliott wave pattern, traders will be prepared to take profit at a target zone. So the third thing that is coming to our mind when we are talking about overbought and oversold zone, we are thinking of okay, target zone or convergence signal, when one group of traders will be prepared to take their profit at a target zone, okay, and another group of traders will be prepared to enter the trade. The target zone does not mean that the price will is the market, the financial instrument will be definitely overbought or oversold, but there is a high chance that the price, okay, if it's going up, will be overbought at the target zone. All right, but do not forget the technical fair value, the sentiment, and the target zone. All right, very, very important. The next thing that one you will think of when we are talking overbought and oversold zone, we are talking about a resistance and support level. The price, when the price going up, the price looking for a better resistance level. Always, nothing else. The price will move from one support level to the next resistance level. You see here the price changing direction here. The next target zone is this resistance level. Trader always talk about exit strategy. Price, when you are buying, you buy from one support level. Your first target is the first and nearest resistance level. Full stop. When you are selling from a resistance level, and your first target is the first and nearest support level. All right. If you do not want to come out, move your stop loss, okay, to secure your gain. Full stop. Okay. All right. So we want to think of support and resistance level to determine overbought and oversold zone. The support and resistance level and the target zone. We must also apply the fractal pattern of the market. The higher time frames commands the lower time frames. Okay, so when I draw the pitchfork tool on the yearly chart and I draw another pitchfork tool on the monthly chart, the pitchfork tool on the yearly chart is superior to the pitchfork tool on the weekly and monthly chart. The higher time frame commands the lower time frame. So one target zone on a lower time frame, okay, is less important than a target zone on a higher time frame. But we are moving step by step. We know that we are looking at the same financial instrument. All right. Okay. It makes sense, okay, and it's also a powerful, okay. We're going now to the quarterly chart of the same financial instrument. I will remove my drawing, the pitchfork tool, and we'll look at the same chart that we were looking at on the yearly chart, this time on the quarterly chart, okay. Do not make a trading decision on one single time frame. It's the biggest mistake in trading, all right. So on this chart, I don't want the video to be too long, so I'm just going to go very fast. If you want to know about the ABCD chart pattern, you need to go to www.stochastic-mardi.com. Okay. I'm drawing a line here. You can see now, but hold on, please. I'll color it now, and then you can see it. All right. We can see in this session that there was a consolidation on this quarterly chart for ExxonMobil, okay, between 1988 up to 1991, and then the price break above and blah blah blah, okay. So we can perfectly draw, you see the price went up big time up to this level here, from 1991 up to 2000, okay. If you like, we can color that line in green. This is an impulsive move. It's a bullish trend, okay? All right, on the quarterly chart, okay? For many years, okay, for 9 years, okay, this ExxonMobil was in a bullish trend. And then the price did pull back. This bullish trend can be divided into 5 waves according to the wave principle. I don't want to talk about Elliott wave at this stage. okay, I want to talk about another chart pattern, the ABCD chart pattern. If you want to know more, you need to go to our website. Okay, in theory, the ABCD chart pattern, okay, the distance from A to B is equal to the distance, okay, from okay, C to D. That's the theory. Sometimes the C to D can be longer than the A to B due to, okay, Fibonacci projection extension, and also the fundamental. The price will not go up if the business is not doing very well. All right. So we see here A, B, C, D chart pattern. This is a target zone as the price display this impulsive move, okay, for many years, and I give a corrective move and start changing direction. We can perfectly project the same distance, this distance from here to here, A to B. We can project it, okay, at the hotspot of the zone. We can project it to the future and draw, okay, an horizontal line there. This is, okay, a greedy target, okay. It's not the first and near resistance level. The first and near resistance level is this one here. Okay, we can draw another line there. I'll color it also into red. All right, you see break above, retest, bam. Okay, so our target zone is here. This is a target zone. At this point in time, okay, this is a target zone as we are talking about overbought and oversold condition. We are taking our technical fair value, the sentiment, and the target zone, support and resistance level, okay? So this point in time, the market is a target zone. We will expect the market to be accepted as overbought, but we do not just sell, we wait for an opportunity to sell. This is a beautiful, okay, overbought stochastic right here. The stochastic was over the stochastic 833 was overbought in this zone. If you like, I can highlight it on this chart. And at the same time, the price is at a target zone. You can watch the videos on our website about a convergence signal right here. It's an overbought condition. One will wait for a clear-cut signal at the target zone, okay, before entering the trade. All right. A pattern is completed. And at this point in time, because this is a bullish ABCD, at the point D, okay, the market is considered as overbought. The bearish ABCD, at the point D, the market is considered as oversold. We do not just buy because it's considered as overbought or oversold. We wait for a clear-cut signal without cutting corners, okay? So right here, this is a perfect, beautiful overbought condition confirmed by the price itself, the number one indicator. One cannot enter the trade on one time frame straight away. So we will select, this is the setup, we will select the signal time frame and the entry time frame, okay, to enter the trade at a low risk point. When one is trading, one must pay attention to the fundamentals, okay? It's not all about technical. The fundamental is very important. Check the news, what the business is doing, okay, what's happening, okay, so that you can make excellent decisions. All right, okay. All right, so this is a target zone. ABCD, this is a target zone. All right, on the quarterly chart, we can see that clearly here. All right, it's a target zone. All right. Another thing I can say to traders here, you can see this is this is here. You look at this level here. This is the stochastic was oversold here. Okay. If we pay attention, okay, carefully here. The price was trying, okay, here you can see the price was trying to pull back here, you see in this session, and change direction here. This is a hot spot trading zone or an oversold zone because the price was going down fast and then change direction. It's an oversold zone. It's a previous oversold zone. As the price returning back to the previous oversold zone, we must pay attention. Previous oversold zone can be validated as, okay, a valid, okay, oversold zone, okay. Second time, retest, this is what's going on in the market. Now, as the price is going up, this is the level we are watching. As we were telling traders to watch the level of 1500, does not mean sell, mean that be cautious, okay. All right, in this session here. All right, price approaching a previous overbought zone. Here price was approaching, okay, previous oversold zone. All right, okay, so this is a perfect oversold stochastic. All right, Let's move on now to the weekly chart, talking about overbought and oversold market condition, or overbought, oversold stochastic. I will remove all my drawing this time. We are now on the weekly chart. By the way, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. Okay, it's pointless to flag this video as spam, because we will remove that comment straight away. So I mean, we don't have time for those kind of okay, blah blah blah. All right, so right here, as you can see, on this weekly chart, we can see here that the price went up to this level, and then we see a kind of a consolidation in this session, okay, and then the price, okay, resumed, okay, the previous move, okay. All right, very important. Okay, this is a consolidation period or a corrective waves. It looks to me like 1 2 3 4 5 A B C D E in this session. There was an impulsive move in this session here. I will color my line now so you can see it clearly on your chart. Okay, all right, so we have again on the weekly chart A B C D a chart pattern here. As very important thing I want to say to traders here, the price, as I showed you before, was in a target zone here, and then a pull back again, okay, on the weekly chart. So there was an impulsive move, okay, impulsive move. Price went big time up, okay, and then went horizontal, okay, and then break above the previous consolidation session. This is a continuation pattern, okay, break above this consolidation session, and retest it beautifully, okay. Just patient traders were rewarded in this session. A gorgeous setup right here. Break above and retest, and boom, okay. As the price breaks above the previous the consolidation session, and the final support right here, and one receives, okay, a buy signal, one will project, okay, the A B distance to the other side. Okay, from here you draw the media line. You can go to our website to watch the video about ABCD chart pattern to understand what's happening here. So this is also, okay, a target zone. When we have the ABCD chart pattern and the price reaches the level of the level delta, zone delta, okay, or the delta zone, or the D level, ABCD, this is the D zone or delta zone. When the price starts going down from the delta zone after a bullish move, the first, okay, or the greediest target is the C level, this level here, because it's ABC. As the price returning back down from the D session, we will put our greediest target, okay, at the level C. So as the price start rolling it down from here, smart money already will set a target here. Does not mean that the price will definitely go down, but there is a high chance that the price may return to C. If it didn't, then the bullish momentum is very strong. But very often, the price will return to C. This is the C session here. Okay, A here, B, C, D. Start rolling it down, you bring it to C. This is a target zone. On this weekly chart, we have a beautiful oversold stochastic right here. So using the overbought stochastic and oversold stochastic with the technical fair value, the smart money, the smart media line, and the fundamental fair value, this market sentiment, the trading triangle, paying attention to the S&P 500, the target zones, the support and resistance level, one can make excellent trading decision. This is the target zone. Stochastic was oversold at a target zone. These are the level where the price is likely to run fast. You see, here again, run fast. You can see what the smart money did here. The price was coming down. They push it fast to the target zone. Price quickly return back up before rolling again to the target zone. This is the target zone. The price again approaching another target zone, okay, in this zone here, okay. When we are talking about target zone, we can use the projection of channels, as I showed to traders before, okay. So very, very important. All right, it makes sense, and also is this powerful. I've been talking to you now nearly 30 minutes now. Okay, I hope you find this video useful. Okay, one more thing before we close this video. We will quickly look on the yearly chart, quarterly chart, monthly chart. We're on the weekly chart now. We will go to the 4-hour chart, okay, and I want to show you again regarding the chart patterns, okay, and the target zone, talking about overbought and oversold, slow stochastic or overbought and oversold markets, okay. On this 4-hour chart of ExxonMobil, we see that the price was going down in this session, okay. There was a low, a bit messy here, a low here, and then we have a lower low, followed by a higher low. The first thing that comes into our mind when we see that an inverted head and shoulder pattern, traders will set a target for the inverted head and shoulder by drawing lines like this. This is the neckline, roughly, okay? Roughly, okay? So don't, all right? So roughly. So they will project the distance from here, roughly, okay? Roughly. Always use the conservative target, okay, when you are trading, okay? All right, so you don't want to be the last one. So they will set their target in this zone. Okay, so the target level as the inverted and the shoulder is formed, one will wait for a clear-cut signal, okay, on the right hand shoulder, okay, before entering the trade. Do not enter the trade as aggressive trader. Wait for a clear-cut signal. So this is the target zone, which I'm going to color now in red, okay, right here, okay. The price tried to go near, it couldn't. You see, some traders. This moment is very, very okay. Demanding when it comes to the target zone. You see here the price couldn't reach the target zone. Second time the price ran down fast without touching the target zone. They force it up again to retest the target zone. You see, very demanding when it comes to the target zone. Okay, so this is another beautiful, okay, overbought stochastic right here. Pay attention to the vertical line right here. When the stochastic was overbought, and the price also was in a target zone. All right, okay, all right. You can do the same thing and say, okay, this is another, okay, low here. Make it bigger, okay, bigger head and shoulder. So I will remove this one here. Okay, so we have a bigger one, and then we can project it higher, and we will say our target zone in this case will be up to this level. For that, we can say that this level here is a gorgeous overbought stochastic right here. Okay, price went down a bit. Okay, all right. If I move this one here, you can see, okay, and the stochastic also. If I move this one here, you can see it. Okay, we are talking about this level. So the price patterns, okay, the market patterns, okay, and the Elliott wave. When we see A, B, C, D, E, each wave being divided into 3 waves. In total 15 waves, okay, A, B, C, D, E. After an impulsive move, we are thinking of correction. At the point E, we consider the market as oversold. We are waiting for the price to run back up. On the other hand, if we have a bearish impulsive move, and then we have A, B, C, D, E, each of these waves being divided into 3 waves, 15 waves in totals, okay. At the point E, the market is considered as overbought. We will look for opportunity to sell at the point E. All right. When we count 1, 2, 3, 4, 5 waves, at the end of the 5th wave, the market is considered as overbought. Okay. In the uptrend, but in the downtrend, when we count 1, 2, 3, 4, 5 waves, and the waves are not overlapping, very important rule for the Elliott waves. Okay, though sometimes there are some distortion. All right. At the point E, in the downtrend, the market is considered as oversold. But remember, the technical fair value, the sentiment, talking about the S&P 500, okay, these are what will, okay, determine, okay, whether the price will change direction or not. The most important thing to remember is that a target zone, a resistance level, okay, whichever tool you are using to determine overbought and oversold zone, okay, the sentiment, if the sentiment does not change, the price will break above the resistance level, retest the level, and continue the movement to the upside. As you can see here, Stochastic was overbought here, you see, where I pay attention to the vertical line, overbought, okay, but the price was not going down much. In fact, it break above this level and continue the movement to the upside. Here, the Stochastic was overbought, here again was overbought, so not much is going on here, okay. But you see, so this is how you want to trade, paying attention to the price itself, the number one indicator, and do not forget the trading triangle, the sentiment. So to summarize everything, when we are talking about overbought, okay, and oversold condition, the first thing that we think of is the fair value. Technical fair value, smart median line, talking about the 6 critical price level. The second thing that we are thinking of is the market sentiment. Very, very important, the market sentiment. The third thing that we are thinking of is what? Okay, the target zones, resistance and support level. We can use, okay, Fibonacci projection, Fibonacci extension, pitchfork tools, chart patterns, Elliott wave patterns, stochastic patterns, okay, to determine overbought and over possible, to determine possible overbought and oversold condition. When one is using a technical analysis, one must also pay attention to the fundamental analysis to combine both methods to make excellent trading decisions. Trading is not all about excitement and blah 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 blah. Okay, it's all about making a real money and making accurate decisions. It doesn't happen in one day. Okay, traders go through different learning curve. Okay, so sometimes traders are very excited and they move. They say angle is going to happen today. It takes time. Okay, they practice. Okay, and the willingness to do it properly will get traders there slowly but gradually. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS 008.